before would probably have seen this, but I really want to just use it to set the tone a bit. So this is a macro view of what's happening in our industry. The numbers are probably a year or two old, but in reality haven't really changed. And I'll open up with probably the number one problem, is that only 6% of South Africans are able to retire at 65. That percentage hasn't changed significantly over the past 5 to 10 years. And this is our responsibility as a financial services, particularly as a life insurance industry, is to help more South Africans retire comfortably. That is our single reason for existence. And this tells me that for us to be relevant in the next 10 to 15 years, we need to make some fundamental changes and some shifts in the way we operate. Again, to kind of support this is that almost contradictory to the first point is that in the 55 and over age group, South Africans are very overinsured, particularly for life cover. The most recent stats said that 55 and overs have twice as much life cover as they need. And when you compare that to the fact that people are unable to afford to retire, for us, our view is that one of those reasons is a misallocation of spend. South Africans, particularly as they're approaching retirement, are spending more on risk cover than they need to be, which is taking up spend which could otherwise be deployed towards retirement and savings. And making that shift and reallocating that spend is one of the most important changes that we can make to start to change the retirement future of the average South African. This graph kind of summarizes it at a macro level, and what it explains is that in South Africa, particularly in the 45 and under age group, and it's more exaggerated in the 35 and unders, South Africans are dangerously overinsured. When you go towards retirement, South Africans become overinsured. And for me, this speaks to two things. One is we believe an over-reliance on lump sum benefits, and lump sum benefits exaggerate this pattern. And the second problem, which is something that Willem and I would like to discuss, is that I think the life insurance industry has failed to make itself relevant and attractive to the younger market, particularly the under 30s that are coming through into our industry today. And again, this kind of supports that point that we every year are effectively selling to the same people over and over again. And we have to expand the reach of our industry. We have to start speaking to and attracting a new market. Particularly with the audience in the room today, and this is a topic that's dear to obviously Icon's heart, but as well as Hollard Life, is that we fundamentally believe that customers are better off if they're able to access quality independent advice. And in South Africa, based on premium volume, only 21% of life insurance risk benefits were sold through independent financial advisors. That means nearly 80% of new business sold, those customers weren't able to speak to an independent financial advisor. And it has to be one of the greatest challenges that we face as an industry, and each of you as individual financial advisors face, is how do we make quality independent advice economically viable to offer it to more and more South Africans? And particularly, how do we make it viable to offer it to individuals earning 20,000 or less? Because that's where the bulk of our market is coming from in the future. So that's really enough of my introduction. The final point speaks to the mix of cover sold. And this is, again, I think something that has to be shifted. In South Africa, nearly 70 to 80% of all risk cover sold is life cover. We are selling 6 to 7 times more life cover than disability cover, yet we understand intuitively that you need more disability cover than life cover. If you pass away, there's one less mouth to feed. If you're disabled, you need to provide for yourself and your family. Yet despite that seemingly obvious fact, the practice remains that life cover is the benefit that's sold first and foremost. And we make up the rest of the available spend with the balance of the benefits. And I think I speak for Willem and Hollard as well, that this is one of the fundamental shifts that we would like to start driving. So if I had to summarize it in 3 themes, and I'm going to lead from that into a question to Willem around where he sees the industry going in the next 10 years. The first challenge I think that we face as an industry is how do we make ourselves relevant to the younger market coming through? And how do we make it viable to offer quality independent financial advice to them? The second challenge is how do we make independent financial advice available and accessible to all South Africans? So that when we look at this graph in 5 to 10 years' time, 80% of business sold is coming from independent financial advisors, not the other way around. And finally, how do we start shifting the mix of cover sold? How do we move it away from primarily lump sum to an income-focused set of solutions? And how do we move it away from life cover first and foremost to an industry that's starting to focus on living benefits, disability, and critical illness? And in doing that, freeing up spend to start allocating towards retirement and savings. So that is the longest intro I've probably ever done. Okay, so let's kick off with the first question, and everyone listening in, please feel free to share questions as we go through on the chat at the bottom. I'll either try and answer them during the course of the discussion or keep them all towards the end, and then we'll make sure that we address them. And if we don't get the time, we'll make sure that you do get a detailed response to your queries. So Willem, I guess having teed up our view of the industry today, and some of that is Icon or Brad's view of some of the areas that needed to be changed, where do you think the industry is going in the next 10 years? If we fast forward 10 years ahead, given what you think is best for the customer, what do you think are the changes that product providers, independent financial advisors, and to some extent consumers need to make to adapt?
Brad, let me. I mean, it's a fascinating question, because if you look at the amount of change that's been happening, especially during the COVID period, I think our world has fundamentally shifted in some ways, and in some ways it actually hasn't shifted. So that's the interesting piece. If we look at where the industry was 20 years ago, both on a short-term and a life perspective, there were hardly any digital or direct players providing product to the end consumer. Today, in the general insurance short-term space, probably about 40% of most short-term insurance is bought by direct players or digitally, and about 60% is still intermediated and independent advice. On the life side, we've seen a number of life insurers wanting to play direct or digital, and they've really only made inroads in the funeral space, in the low end of the market, the kind of mass market. There they've made some inroads, but they've really battled in the advice space. And the reason for that, I think, is pretty evident, or obvious. And that's why Hollard has joined forces with Icon. And we believe still that the independent advisor is a critical piece of the puzzle in order to get our product up in the market. And it's all around the complexity of life insurance and advice, and the burden of advice on the advisor, and then that customer then having a product that would service their needs. And I've got an example. The other day in December, I had to deal with an irate customer because he was very upset because he got the wrong advice, and we couldn't find a record of advice, and in the end, it cost Hollard quite a bit of money because the advice just, there was no record of advice, and it was very difficult then to disprove the fact that the customer said he wasn't given the right advice. And it was actually not an independent, it was a franchise type tied agent person many years ago that sold the policy. So kind of that highlighted the issue. But if you look at how the world has changed during the COVID stages, I mean, before COVID, people were digital. And then during COVID, it exponentially enabled the digital world as we are speaking now to all of you. I mean, we're on Zoom, and yeah, it's got some glitches, but it still works. So it has actually changed the way in which we work fundamentally. So that's the one issue. Digital and how we service our customers has changed fundamentally. It has not decreased complexity, however. So if you look at the products out in the market, if you go online and you try and research anything around life, disability, dread disease, it is, when you get to the third paragraph, you're totally confused. And we must understand that you, as the independent advisor, you're the expert. You know 100 times more than the normal man in the street. I mean, that individual probably only looks at his policy wording or documentation maybe once ever. and he relies on an expert to help him. So I don't believe that independent advice will ever go away. I actually think that it will become more important as complexity increases. So it is, how do you marry complexity with simplicity and ease in order to write more business? Then on your comment around the shift in, most people have got life, pure life, and then you've got the disability, critical illness, dread disease, etc. as riders. If we look at the dynamics in our market, and if you look at the average age, in South Africa, that's kind of stayed pretty stable as a result of COVID. But in the rest of the world, and we know where we're going with nanotechnology, with medicine, and it is pretty obvious that the general trend is that people are going to live longer. And if you are going to live longer, your critical illness benefits, your other types, your income protection benefits, those benefits are going to become a lot more important than just life insurance. So my view is that in the next 10 years, there is going to be a shift in service customers. Advice will always remain extremely important, because complexity has increased tremendously, because there's optionality is just so big. And every single product provider is putting their product out as being the best and giving you the most for what you pay for. And we know that's not always the case. And then lastly, you know, the segment of the market. We need to relook at, and need to make it easy enough for the independent advisor so that it's viable for you to service the younger segment of the market where the income levels are lower. But we know in South Africa that there's a massive market starting to emerge as people are starting to earn more salaries, and the demographics are changing. So a lot more non-whites are coming into the fray and into the working environment. And traditionally, those people never had brokers. They don't know that, you know, for us WASPs, your father had a broker or independent financial advisor. With the rest of the people in our country, that's not necessarily the case. But the complexity still remains. So I actually think there's a fantastic opportunity for the independent advisor to, as long as it's viable, and my view is that what you provide as Icon makes it viable, because it's not as expensive to do and not as difficult, makes it viable then for the independent advisor to start targeting a different segment of the market, because the need is there. That segment is coming through into the middle and upper class. So they are starting to buy expensive homes. They've got high-end jobs. You know, they need to protect their family. They're starting to get used to a level of income that their parents weren't used to. But all of a sudden now you want to protect that. You don't only just want the funeral product. You now need more cover.
Willem, you've picked up on a couple of interesting themes there. I mean, the first one that comes to mind, you spoke about distribution channels across the different, you know, short-term life, etc. And I think often we talk about digital direct and intermediated as two separate channels, and they are mutually exclusive. Do you see a world where they start to augment each other? You know, where digital is possibly used to focus on simplifying the product and the new business experience, but it sits to support an advisor or intermediated driven advice process. I really believe that so far, so many product providers have invested a huge amount of time and money in digital distribution, but are now starting to put the same level of focus in saying, how do you create digital technology to augment an intermediated process? Do you see that trend coming through as well?
Brad, absolutely. So I'm seeing two interesting trends. One is that the direct players, life players, are starting to move into more a agency model or independent model, because they've realized that the advice component is becoming more relevant, because there's obviously a lot of pressure also from the Prudential Authority to ensure that customers get value for money. So there's also a legislative impetus to get independent advice. But my view is that in the next 10 years, the digital broker, you can call it that, or independent broker that is serviced, that services the customer digitally is going to become really relevant. Because again, it is complex. And if I just, put myself in somebody's shoes that don't understand our industry and don't understand our product, if they want to be serviced digitally, they want to, on the digital platform, ask their independent financial advisor, what is this benefit? And then get a response either on WhatsApp or on the chat channel. So I believe that the world is moving towards it will never only be digital. So I think I need to make that clear, because as you all know, I mean, I went back to the office last week and it was fantastic just to see people and interact with people. We will never lose that. I mean, we are people and we want to see people. But when you do your research, you're going to go online and you want an expert, an independent expert, to advise you, and then you'll probably schedule the appointment to buy the insurance. So I believe that there's a huge scope for us to remain relevant as independent financial advisors if we embrace the digital era and use it to our advantage to decrease costs.
Yeah, I agree, Willem, and I think the point I'd like to make is that I see the future as a digitally enabled broker rather than a digital broker replacing the human. Yeah. And we need to find a way for those two worlds to support each other. And even outside of financial services, it's been really interesting in the last 5 to 10 years. Companies like Amazon, Apple, etc., and locally Yuppie Chef, that started out as exclusively online plays, that have realized that people still want to engage with people. And those online businesses have opened up brick and mortar stores, and the two of them work together. And as you say, people look online, or they want to go to the shop, look and feel, and then they might buy online, or the other way around. And increasingly, we're going to see more of that in our world. And increasingly,
absolutely. I mean, it's such good examples. If you look at Amazon has started in the US to open retail stores. So, and I mean, they were exclusively just online, but they have realized that for some items, people shop, or they won't shop online. They'll research online, but they still want the look and feel. And in our world with complex products, which is highly technical, that independent advice remains crucial.
And maybe just two other themes to touch on, and then we can maybe bring it back to what's next for Hollard. And both of them you brought up. I think the one is this idea that with medical technology and the advances, our life expectancy has fundamentally changed. We are now living in a world where living to 90 to 100 is not unusual. It's now going to be expected. We're living longer, healthier lives. And to bring it into today's discussion, how does that affect the nature of advice we give? Even in the South African market, critical illness was originally invented as a way to give you money before you died so that you could die comfortably. Whereas critical illness today really serves the purpose of providing you an income or providing funds so that you can get your treatment and recover and continue to live. I think we need to accept that the primary role of the life insurance industry has shifted from giving you money when you die to now needing to be an industry that supports you through living benefits. Benefits that help you while you're alive, help you mitigate the impact of horrible things happening to you and your family while you're alive. And in many ways, supporting you to live healthier lives to prevent bad things happening to you. Do you see some of those things coming through in the focus on products? And more specifically, how do you see that changing in the financial plans and the assumptions built in F&As that advisors need to start thinking about differently now?
So Brad, yeah, we are seeing a big shift there. And we need to ensure, firstly, from an advice perspective, that, and which makes it a lot more complex, as your independent advisor needs to know a lot more about the trends that's actually happening when they give that customer the advice around a living benefit and not just a life benefit, and also an investment benefit. So it is, how do you marry the complexity around, how much life cover, disability, critical illness benefits do I need, and how much savings, and investments type of benefits do I need? because I am going to live longer. Likely it's very high, but I might get sick, or I might be disabled, or whatever that might be. And as you pointed out earlier on in your discussion, if you are disabled, the financial burden is more. It's not less on you and your family. So we are seeing those trends. We are, and as Hollard, we are trying to marry the complexity, the longevity of the average age of people with our products to ensure that you've got something that is simple, yet very rich in benefit. And our critical illness and disability benefits, we believe in our new Life Select product is best in class. And it's for that reason, because we are seeing that trend happening. And again, I mean, bringing it back to the independent financial advisor, it keeps the relevance, because for those individuals and people here today, because it's complex to explain to somebody what happens if you are ill, what happens if you are disabled, and how those benefits compare. I mean, we see the rest of the market and our competitors as being exceptionally complex. Their products and benefits are unbelievably complex, in the sense that there's lots and lots of benefits that actually doesn't add any value and doesn't speak to any of these major trends. It is just a lot of fluff to try and create as much noise. So it's very difficult for other people to compare, this product to the other product, which again, I see the role of the independent financial advisor becoming more relevant, because you're the experts in the room. You know how to go through all the gumph and then pick out what is really important for the end consumer at the end of the day.
Maybe just to wrap up that point, the reality is people are going to live and work longer and have healthier lives. And I suppose the summary of that is retire at 65, die at 90 is no longer relevant when it comes to building financial planning assumptions. And if that's the case, and we assume now people are going to work until 75 and die at 100, how does that change our view of how you should allocate 1,000 Rand a month of premium? 10, 15 years ago, it might have made sense to put 800 Rand of that 1,000 towards life cover. I would argue now, given that people are more likely to live way older than they expected and continue to work longer, in a world where there are constraints and there's limited affordability, really advice comes around, where do you manage the trade-offs? And I guess what I'm arguing is that in a world now, given the trade-offs that needed to be made, I would look to start shifting more towards living benefits as opposed to life benefits. And look to rethink the amount and the timing of the savings, because the retirement reality is fundamentally different. And both product providers need to start looking at how products are designed with that in mind, and advisors and planning tools need to start adapting for that reality. Maybe just one more theme you picked up, Willem, and it's too important not to cover. And I'm going to maybe preface it by saying we're going to try and cover it in 2 or 3 minutes, because it's a webinar all on its own. And that's the issue of transformation. And again, I'm aware of how difficult a subject it is to cover when there's 2 white males talking about it, and we probably are the wrong people to have this conversation in the first place.
Yeah, and the one is kind of early 50s,
We won't say which one you're referring to.
No, I've got more hair.
But I think we wouldn't be doing ourselves or the industry justice unless we did address it. And maybe if I could try and put some of the thoughts down that I heard you expressing, is that the reality is the demographics of South Africa, Black, colored, Indian, white South Africans, is not represented by the demographics of the customers of life insurance products today. And similarly, is probably not represented by the demographics of the people leading life insurance companies and the people distributing life insurance products. And we have to, as an industry, find a way to make that transition. But we have to do it in a way where we are opening up our industry to more people and expanding it to a broader market, rather than simply just replacing one with another. And that's something for me that's critical. Again, I'm moving slightly into personal views here, but I wanted to test your thoughts, and maybe we can wrap it up and see if there are any questions about that. But I think it's oversimplifying the topic to say, well, if you want to open up your market to the emerging market, you need to have funeral cover. I don't think that's necessarily the answer, because one of the most beautiful success stories of South Africa that isn't spoken about enough is that the middle class has completely reshaped. And the South African middle class today, with spending, with income, is starting to reflect the broader demographics of South Africa as it stands. And I believe that it's a gross simplification to say, well, you can break down product needs on racial lines. We need to look at it around income levels. And we need to find a way for us as an industry to make living benefits and quality independent advice relevant and accessible to all South Africans. And I guess that's our challenge. I'm not saying anything that anyone doesn't know, but maybe I want to just leave that with you there.
Yeah, so Brad, I mean, couldn't agree more. I also think that it actually emphasizes the need for independent advice, because that demographic that's changing, we're not, as I said earlier on, exposed to an advice model. But the need is there and the demand is there. And if you want to take out a loan to buy a house, all of a sudden your need for a different kind of cover other than funeral immediately emerges. Same with cars. So as you build assets, all of a sudden that changes. A lot of the middle class is starting to send their schools no longer to public schools, but to private schools. So there's a massive shift. And yet there's such a big gap. There's a big delta between the understanding of what our products can give and why it's needed versus, because I mean, it's there and there's a need for it, but the demand is very slow. And what we found specifically in Hollard is we would get individuals that would buy, we have had instances where a single person would have 9 funeral policies. 9. And yes, sometimes they buy it for extended family members, but the cost of that is probably 3 times as much as it would have been if you bought a whole of life policy with underwriting and with your disability and rare disease benefit. So that part of the market, there is such an opportunity to explain to the individual that actually you are paying way too much for the cover you are currently getting. And that's where I believe there's a massive opportunity. And with if you go digital and if you make it easy and if you make your advice model also digital, like you've done with Icon, and that's one of the reasons we're so keen to work with you. It just makes it so much easier for the advisor to prove the fact that they're given the right advice, but it doesn't cost them a lot of money. It's not a huge amount of paperwork that they have to do. So simplicity without sacrificing benefit is, in my view, the route to go.
100% agree with them. And I think it comes back to the themes we've been touching on, is that we have to make independent advice accessible to more South Africans. One of the ways we believe we need to do that is by using digital technology to make it more cost effective. The second thing is products are, I would say, overly complex and in many cases unnecessarily complex, which is off-putting and makes it difficult to understand. And really, but again, it just shows the power and the need for independent advice. That individual who has 9 funeral policies, had he or she received better independent advice along the way, as you say, that entire spend could have been reallocated. And that individual might be sitting in a full suite of risk benefits and have money put away towards a retirement. It's not about getting people to spend more money than they're already spending. It's about educating people to spend that money more effectively and to reallocate that spend. That's how we're going to start to make, I think, a meaningful shift. We're getting to 11:15, so I'm going to try and start to wrap it up. But please share any questions you might have. And also for those of you who follow Icon's LinkedIn post, please, if you don't, follow it. And maybe I'll draw your attention to the newsletter that was recently sent out and the blog post around some really helpful tips and tools to increase productivity for the year ahead. And Willem, linking to the question around the year ahead, maybe I could bring it back to Hollard itself. I think for most of us who have been around the industry for a while, we remember Hollard's various iterations over the years. I mean, I fondly remember Ultrisk. It was an amazing business that started out and really served a need that no one else was willing and brave enough to serve at the time. Standard, but the alternative risks. Subsequently, Ultrisk became Hollard Life, and I guess over the years has become more known for simple, well-priced products. In my previous life working at FMI and even in my current life, I would often default to seeing Hollard as that's where you want to go if you want to get well-priced lump sum benefits. Having spent the last year getting to know Hollard from an icon perspective, I've realized that I probably didn't give your products enough credit, because digging deeper, actually, there's some real value there. And I think Hollard is way more than the cheap and well-priced simple products. So maybe with that sort of tee up, give us an idea of what we can look forward to from Hollard next year and the years ahead, and how you're thinking about trying to position Hollard and its product offering.
So Brad, dealing with the complexity out there and the fact that there are so many different offerings with so many different benefits, and that a lot of our competitors are actually, let's create more complexity. Hollard has decided that we want to embrace the simplicity theme, and not just simplicity in the sense of our product offering, but also in the way that you deal with us, the ease, the policy wording, the accreditation process. Actually make it simple and easy for the independent advisor to deal with us and for the customer, so both, without sacrificing benefit. And I think that's important. So, move away from this kind of cheap and cheerful product play to a stunning simplicity type of proposition, but without sacrificing benefits. And we do believe that our product is probably best in class in some elements, like I mentioned critical illness. So that's our take. Hollard started off, as you said, as OtRisk, which was substandard lives. We still do substandard lives, but we want to move into a space where if you're a standard life, you must come to us. We can compete with anybody that's out there, whether that be Sanlam, whether that be Discovery. Our product offering actually is on par, but we try to keep it simple. And all we've done is really remove the fluff, remove all these bells and whistles that actually doesn't create any value. It increases price. The customers never use it. And again, it's trying to keep to this digital theme, because our view is that the next 5 to 6 years, the next 10 years, that's where the world is going. So we need to prepare ourselves for that world. Yeah, so simply put, Hollard is everything you need and nothing more. It's kind of, this, what you see is what you get. And that's kind of where we're trying to position ourselves.
I love that idea of simplicity without compromising on quality. I think not necessarily with the wrong intentions. The products in our market have become overly complex. And my sense is some of it is because we have been designing products around the edge case, around the 5% of customers who can afford to take the full financial needs recommendation. The reality is most of the customers that we are facing today, or that independent advisors are speaking to, are sitting with a budget constraint and have only got X amount of money to spend. And in that case, at a macro level, the greatest impact you can make on that customer's future is where you allocate that spend to the right mix of quality benefits. And very often the additional features that are built in, as you say, add price, but not the same amount of value. There are a number of features and products today that add 5 to 10% to the premium, but the typical customer either doesn't know it exists or is very unlikely to even exercise it during their policy lifetime. And for those cases, I think that 5 to 10% would have been better deployed elsewhere. And I guess that's the message that Hollard's putting through now. I'm gonna try and sort of summarize them in one or two rather than address each of them one at a time. But maybe in closing, Willem, what I'm hearing from you is a much more positive, optimistic outlook for both the industry and independent advisors. And I think for too long, we've heard the negative story. We've heard independent advisors under threat. It's harder and harder to be an IFA. It's tougher to find customers. Affordability is an issue. What I'm hearing from you is that each of those things are absolutely true. But if we are smart and we use the tools available and we learn to adapt, the future for an independent financial advisor is strong. And companies like Icon, like Hollard, and all the other product providers that we represent fundamentally believe in the value of an independent advisor and want to protect and want to enable their growth.
Agreed, Brad. And I also think what has helped us was COVID. So all of a sudden, the first time in my career, the fact that we're fallible and that we can die was no longer advertised by the insurers, but it was a reality. And because people are sitting at home, they took stock. And most of us, or many of us, have lost family members to COVID. So it has really changed the way we think and the way we We will engage with an independent advisor on our not just life insurance needs, but also investment, critical illness or disability needs. Because again, I mean, long COVID is real. There are people that are affected. So it has actually made such a shift in how our psyche works. And we've seen that in our volume. So we have seen in the Hollard stable, and we're not the only insurers in the country that's seen that. So yes, we paid out in excess of about 1.2 billion rands worth in claims, which has hurt us. That's huge, but I mean, that's why we're there. On the inverse side, we've seen the volumes pick up. We've seen people are more open, and if they get proper independent advice, then they will get the best product that will suit their need. Whether it's a Hollard or another competitor's product, that's fine, but they will be covered.
I mean, I think you made such an interesting point there, is that for the first time, it hasn't been life insurers or advisors who have been forced to talk about the risk of death. It's been happening around us. And as sad as that is, it's done the awareness and kind of relevance job for us. And I think the industry has come out of the last year or two with massively improved credibility. It's been a particularly tough time. I mean, insurers have had to deal with excess claims and had to deal with their staff being affected by COVID and their staff having to move remote. And I think by and large, the experience of the customers and having claims paid and processed has been very positive. So I really believe that where there might have been a credibility or a trust issue 2 or 3 years prior, the last year or two, I really think the industry has done a huge amount to improve that. And again, just to touch on volumes, I've never seen a January kick off at the pace that it has. I sense an unbelievable amount of optimism around the country. And there is a feeling that the last year or two is incredibly tough, but now we want to get back, and we want to get back to business. So, I mean, I think we share the view that it's a really exciting time, and I'm very optimistic about the next year or two ahead for all of ourselves and the industry as a whole. Thank you everyone for joining. More importantly, thank you everyone for staying, particularly in the first 5 or 10 minutes. Willem, it's been really great to chat to you. I appreciate your time, and I really hope for those of you who have joined us this morning that you found it interesting and taken some practical tips for the year ahead.
Just also thank you everybody, and thanks Brad. I hope this was useful and entertaining at least.